Hey everyone, this is Yussi. I run a small investment firm that specializes in REIT investing, and just recently we posted a video entitled Very Good News for Realty Income, in which we explained that we expected the company's growth rate to accelerate going forward as a result of the recent expansion in cap rates in the net lease property sector. As a reminder, Realty Income was getting roughly 7% cap rates on its new acquisitions for most of 2023, and this was a bit of a problem going into 2024 because its cost of capital was right around the same level at 7%, so it wasn't able to earn a good spread over its cost of capital. This then explains why the company initially guided to only acquire $2 billion worth of assets in 2024, down from nearly $10 billion in 2023. But the first piece of good news then came in the first quarter results when the company announced it had managed to acquire roughly $300 million worth of properties in Europe at an 8.2% cap rate, which was a significant improvement from 2023. This resulted in a solid 100 basis point spread over its cost of capital, and therefore we predicted that Realty Income would turn back to the offense, acquire a larger volume of properties, and that we would see its growth rate accelerate from here. And it appears that we're correct. Realty Income just issued an update on its latest performance. They increased their full year guidance, and here's what the CEO of the company had to say. We are pleased to raise our guidance for full year FFO per share and investment volume, reflecting our continued confidence in our business outlook as we approach the midpoint of the year. These increases stem from an improving investment volume, particularly in Europe. Additionally, we continue to see stable operating performance in our high-quality, diversified global real estate portfolio. We believe our size and scale place us in a unique competitive position to capitalize on the current market environment. And so I think that this is great news because it reaffirms what we previously thought. The real impact of this on their 2024 results really isn't that significant. They now increased their acquisition volume guidance from $2 billion to $3 billion, which is an improvement, but it's still down quite significantly from 2023, and they only slightly increased the lower end of their FFO per share guidance for the year. However, this bodes really well, in my opinion, for 2025, 2026 and beyond, because this seems to imply that transaction volumes are now finally recovering in Europe, and that's precisely where Realty Income is today earning the largest spreads. Therefore, my base case for Realty Income is now getting stronger. Earlier, I would have expected a 2 to 3% annual growth rate on a normalized basis, so excluding the impact of any potential mergers or acquisitions with other REITs, but that's now likely going closer to 3 to 4%, so that's clearly an improvement. This means that even ignoring any upside from potential multiple expansion, Realty Income should now be well positioned to deliver near double-digit total returns to shareholders from the combination of its 6% dividend yield and its 3 to 4% annual growth rate. And that's not all. Another important piece of good news is that inflation now continues to cool down. After some stubbornness from the headline CPI over the past few months, April's CPI report shows disinflation now resuming in both headline and core metrics. This is great news because it increases the odds of interest rates being cut already in the near term, and the main reason why Realty Income and other REITs are today discounted is because of the surge in interest rates. So if you now remove this reason, because interest rates should return to lower levels, we will likely see the valuation of Realty Income expand from here. Hey, sorry to interrupt you for a second, but if you think that this is valuable, could you please click the like button? That helps me a lot to produce all this free content for you. Thank you so much in advance. According to the latest data from the Fed Watch tool, we are likely to see a 75 to 100 basis point reduction in interest rates within a year from now. And if that's the case, then I would expect Realty Income's growth to accelerate even further. Earlier I said that my base case now already went from 2 to 3% to 3 to 4%, but if we now see a roughly 100 basis point reduction in interest rate over the next year, then that 3 to 4% will likely go closer to 4 to 5%, as Realty Income would be able to earn even larger spreads over its cost of capital, expanding its potential growth rate for its FFO per share. And I think that such an expansion in its FFO per share growth, coupled with lower interest rates, would warrant a materially higher valuation multiple for Realty Income and result in quite significant upside from here. Right now, O stock is priced at roughly 12.5 times FFO. It's offering a roughly 6% dividend yield. Historically, it has traded at closer to 20 times FFO. I don't think it's going to return there because I don't think interest rates are going to return to zero, but could we see it return to 16 times FFO if its growth accelerates and interest rates return 100 basis points lower? I think that's quite likely, and this would result in 30% upside from here. So overall, I'm bullish on Realty Income. I think that investors will do quite well owning the stock. However, does it change my conclusion that Realty Income probably isn't the best pick in the net lease property sector? it still doesn't. I continue to think that its peers like EPRA Realty, Essential Properties Realty Trust, VICI Properties, WP Carey are likely to offer higher total returns over time. I think that their risk to reward is still slightly better. However, my preference for these REITs over Realty Income is now smaller than it used to be, and I do think that Realty Income can make sense for some investors, particularly retirees who are looking to really maximize safe income from their REITs and are not interested in total returns. I think that for that small subgroup of investors, Realty Income might actually be the best pick in the net lease property sector. But again, I think that even retirees, if you retire today, most retirees probably have a 20 to a 30-year investment horizon, and therefore I don't think that it's probably smart to just focus on maximizing safe income. I think that inflation protection, growth, appreciation are still important factors, and therefore for most investors, I think that there are better alternatives. But overall, I am bullish on Realty Income, and all of this is very good news for the company. Now, if you want to access all of my research on Realty Income as well as its peer group and other REITs and my entire portfolio, you can join High Yield Landlord, which is my REIT newsletter for a 2-week free trial. I'll put a link to it in the description of this video. Not long ago, we have also conducted interviews with the CEOs of VICI Properties, EPRA Realty, Essential Properties Realty Trust, and other peers of Realty Income, and you'll be able to access all of this exclusive content free of charge with our 2-week free trial. And then finally, if you thought that this content was valuable, I would really appreciate it if you click the like button and subscribe to the channel. That helps me a lot to grow it. Thank you so much in advance, and see you at my next one. Bye-bye.